Hey guys, welcome back to another video by Fully Informed Trade, or Fitrade for short, knowledge for everyone. My name is Alex Cho, and today I'm just going to go ahead and review the overall markets excluding gold and silver, because gold and silver will be covered exclusively in a different video. But yeah, let's get to it. First, let's start by QHU360 Tech. Now, this company just took a total beating. It fell by 8%. It's basically a Chinese technology company that provides antivirus services for free, but later on they plan on doing a value-added service, so a free version and a more expensive version. It makes sense, and yeah. But what's basically happening with QHU360 is basically the same thing that happened with Baidu's initial public offering. So what you guys could basically anticipate is, more room to the downside. It could easily fall down to at least half of its initial public offering valuation. I saw the same exact thing happen with Baidu, and I will assure you that even though it falls to half of its value, if you're a really long-term investor, you believe in the Chinese story, you believe in the long-term prospect of the Chinese economy, and it does hold a lot of prospect. It is growing at a ridiculously fast rate. It represents around 600 million middle-class people currently, and it's set to grow to around 900 million middle class by 2020. So again, middle class is growing rapidly in China. Consumption will most likely go up. And remember, if you guys don't believe the same pattern of spending and consumption won't happen in China, but wait, let me reword that. If you guys don't believe that Chinese consumption will eventually look like the US's today, well, don't be fooled, because eventually a developing economy eventually becomes a consumer-based economy where a large majority of its GDP is based on consumption. In our case, in the United States, our gross domestic product is 70% reliant on consumption. So again, will the Chinese economy be able to use these services? Will this company grow? Yeah, eventually. You're probably looking at a 3 to 5 year term. And, maybe towards the second and third year, that's when you'll start seeing a lot of growth in the stock, a lot of growth in the earnings, and that's where you'll get the reassurance, and investors will feel much more confident in the economy, in the Chinese economy, because remember, the Chinese government keeps on raising in those interest rates, but also they'll feel more confident in the company itself and its story. So, again, if you're a short-term trader, you would want to short this stock just because it does have some very high PE multiples. Chinese stocks generally go out the gate very strong, but end up falling for the next week, couple months, and even for a year. And then eventually, if you hold on to it for long enough, maybe a couple years, that's when you'll start seeing the maximum benefit. That's where you'll start seeing your returns. So that's pretty much what I want to go over. That's the key highlight stock that I want to point out today, which is ticker symbol QIHU, QHU360 Tech Company Limited. Alright, now let's go ahead and review the overall markets. Dollar index has fallen drastically throughout the day's trading session. This is what I mean by giving ammunition to those traders, those investors. Of course, the Dow Jones Industrial Average didn't go up today. I do believe a lot of institutions did start to take their profits off the table. However, the stock market will most likely continue going higher, at least throughout earnings season. But once we get toward near May, that's when you want to get rid of your positions. That's when you want to secure your position. And that's also where you want to start either hedging your positions. If you're a really long-term investor, you just don't want to sell your stocks for tax purposes, then yeah, you'd probably start hedging your positions. But if you're a trader like me, you would probably look for those short-term short opportunities and other stuff like that. So remember, dollar index will continue going lower, and eventually towards May, you'll probably see a bid back into the dollar. So again, just ride this downwards momentum, and I do believe it will continue that way for quite a while. As you guys have seen, it has already broken its previous low done in on March the 23rd, and now we're going closer to the lows made in December 4th. And yeah, so just keep that in mind. December 4th of 2009, we're going to get close to those lows again and retest the $72 level eventually. Again, I do believe the dollar index will continue its downwards trend. Now, if you do get a downwards trend, where do you see the Dow Jones Industrial Average? Well, you'll most likely see some more positive movement. I was a bit cautious and a bit skeptical because the Dow Jones Industrial Average didn't really have that positive of a day. even though the dollar index was falling like a brick throughout the whole trading session. So that kind of gets me a little skeptical, a little nervous, but definitely I do believe that there's going to be more room to the upside on the Dow later on. We do have a short-term negative indication of trend. We do have a double topping pattern, but we haven't gotten our earnings yet. And that's the key point here, is that we do have to, we really need those earnings to be bearish. And we're not getting those earnings, we're not getting that information, and I generally don't see people sell in front of earnings season. I usually see it come afterwards. So again, I'm still bullish on the stock market, at least over the short term, but you know, coming May, you're going to see some big selling pressure, so just keep that all in mind. Moving on, let's go ahead and review the Euro-US dollar. The Euro did strengthen substantially to the US dollar. That makes it very, very easy for these foreign US companies, when they bring in that money, it's going to be worth a heck of a lot more in US dollars. Well, it'll be inflated too much more, because I mean, come on, let's say we sell cars, and you know, for 10,000 euros. When you convert that back into US dollar, that equates into, give or take $14,483. Again, $4,000, and ever since the Euro-US dollar has continued rallying throughout, throughout the first quarter, basically by around, I guess 200 pips, not 200 pips, more like 2,000 pips, but because it's gone up by 2,000 pips, which equates into 20 cents on the dollar, that implies that these imports, or these big companies that make earnings in foreign countries like Europe, they're going to get a huge boost in earnings just by that alone. So just remember that these earnings are going to come out pretty strong just because of what you're seeing in the Euro-US dollar. And remember, the euro does represent around $16 trillion in gross domestic product. So if companies can earn 20% more, or at least report earning 20% more, then chances are these companies will stand to benefit so much that in fact it will have a huge impact on earnings. Therefore, I'm relatively positive on earnings, and just keep seeing that positive momentum coming out of the euro. Now, the US dollar Japanese yen has pulled back a bit, but there is a lot of central bank intervention, and I do think that it will continue to persist. Because of that, I do believe that eventually we will touch that 84 area support and eventually bounce off of it. I do think that we have a continued uptrend in the US dollar Japanese yen pair. It's just taking a break after having already rallied by around 800 pips. So that's quite impressive. But remember, there's much more room to the upside. You just got to be a little patient. And again, uptrends take time to develop, and there are going to be some pullbacks, but then it's going to keep going higher just because of those central banks. Now, let's go ahead and review the next chart, which is crude oil E-mini June 2011 futures contracts. The crude oil has basically blown through the roof. I was anticipating 110, but it's already gone up to 113. And this is kind of the main reason why stocks had a hard time getting a bid in the markets. It's because crude oil has gone up so much that it's impacting the economy very, very negatively. And here's the gist of it. Every single time crude oil goes up by a single dollar in valuation, you reduce the gross domestic product by at least 0.2% or something like that. So it damages the gross domestic product. Every $10, every time crude oil goes up by $10 by the barrel, the gross domestic product figures dropped by 0.20%. 0.20, not 20%, 0.20%. So that's like 1/5 of 1%. All right, just making sure you guys get that point so you're not misinformed. But that's what's making people very nervous, very skittish. They don't want to buy stocks in a day when inflation is clearly being shown out in broad daylight. Now, if crude oil didn't go up and you saw the dollar index fall in value, then of course the stock market would have had a great bid and people would have been willing to buy stocks much more. But right now, because of the higher prices in crude oil and that continued demand coming from these future pit traders, obviously crude oil just keeps going higher and higher and higher based on fears coming out of Libya. Alright, Because of that, I do think that we have some key stocks we can play to our benefit. One of them being is British Petroleum. Again, British Petroleum is a value play. It has gotten, it has done some bad things in the past. I know they screwed up with the whole entire Louisiana rig thing, but at the same time, I do believe British Petroleum is a way to play it. Since it is a value play, it means that the stock is trading a lot lower than your other oil plays in the same space. So again, British Petroleum is well exposed to the oil markets, and of course, if the price of oil goes up, chances are British Petroleum will go higher. We got a weekly triangle coming in on this, we got a daily, and we got a monthly. Therefore, I'm relatively positive on this stock. Anyway, I didn't have enough time to review the bond market, but I will in my other videos later on. So if you guys are interested in this kind of stuff, just please be sure to go ahead and subscribe to my channel. You'll get more of this information on a regular basis. And also, if you guys want to use the same charting software I use, check out the link right below this video. Take care, folks. I'll see you guys next time.